Very good evening, friends. Beside Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. Standing today on 9th December 2020, Treasury Consulting Group Valuation Desk is covering a very important video which is FCCB and FCEB. FCCB means foreign currency convertible bonds, while FCEB means foreign currency exchangeable bonds. But before I go ahead, let me remind you that in case you have any questions covering our paid research desk, covering our hedge fund desk, covering our recently launched TRFX Academy, which is just like Amazon and Netflix, whereby the annual charges starts from 530 rupees per month. Our video trainings, our Sheetal Academy, our free reports, our magazine, and any other thing, you're welcome to WhatsApp at 9818485155. We know that there are many Asian economies of the globe, those who are having huge amount of NCDs, non-convertible debentures, and FCCB, which is foreign currency convertible bonds. And India is one of the Asian economies who are having both. The truly estimation of which Asian economy holding how much FCCB and NCD is really difficult as of now. But today I wanted to talk about the valuation issue of FCCB by our valuation desk. Foreign currency convertible bonds valuation dependent upon three important factors. Number one, which entity issued that? So example, if I speak about Reliance, if Reliance issue FCCB, then their QSD, quality spread differential, is around 100 to 125 bips, which is okay, not bad. It depends upon that. While if the same FCCB is issued by the company whose quality spread differential, which is shortly known as credit spread, is more than, then more than 200 250 basis point, then this is seriously a cause of concern. Second important thing while talking about FCCB is in which currency it is issued. 99% books, Investopedia and all say that FCCB is issued in dollars. I don't think they are completely incorrect, but they are not completely correct also. Because many a times FCCB, foreign currency convertible bonds, are issued in other currencies also. Example, GBP, Euro, Swiss franc, Japanese yen and all. Now you must be thinking why I am raising this point. You have a valid concern. I am raising this point because there are two kind of companies we have in this world. One, those who are treating their treasury centers as cost center. Example, in their organization, treasury person is treated as term deposit, FD, mutual funds, fund transfer, and maximum salary. Somehow dollar sale or dollar buying. Another is like Reliance and all, those who treat treasury as a hedge fund. That's the reason they are highly successful in nature, to be honest. The companies, those who are first, and considering Indian example, they have functional currency as INR. Considering Singapore example, functional currencies as Sing dollar. Considering Hong Kong, functional currency as Hong Kong dollar. They would be issuing FCCB in US dollar terms. So in case of Indian, USD INR. In case of, I would say, in case of Hong Kong, USD Hong Kong dollar. In case of Sing, US to Sing dollar. But hey guys, a right treasury function is a right company is the one who treat treasury as a revenue center. And how? What they do, try and understand. They issue in Japanese yen, which is amongst the carry currencies of the globe. There are two carry currencies of the globe. Number one, two types of carry currencies of the globe. Number one is the investment carry, and number two is the funding carry. And Japanese yen is an investment carry or funding carry, I have hardly seen any Indian company who issued FCCB in Japanese yen, and I really do not know why. One of the cheapest way of handling FCCB valuation is cheapest way of handling foreign currency convertible bond is definitely the Japanese yen. Even mathematics can support that. Third important reason is the embedded derivatives. I went through several FCCB valuations, FCCB indentures on Google. Few are Indian companies, few are Asian companies, but I have hardly seen anyone who is using embedded derivatives. Now you must be thinking, what are embedded derivatives? Good question. Embedded derivatives is when you have call and put option as per books. Embedded derivatives are the structured arrangements created in such a way whereby any bond can have embedded nature. Example, call, put could be range forward. American companies are known for having embedded structures like range forwards, and some American companies are known for having exotic embedded structures like Seagull and all. But in Southeast Asia, the most common embedded structure is call and put, which is really a cause of concern to many people. So FCCB, foreign currency convertible bonds, is dependent upon three clear factors. Number one is definitely the QSD of quality spread differential of that organization. Many intelligent people are calling QSD as credit spread, but they do not know that the difference between credit spread and QSD is like difference between Singapore and Somalia. Both start with S, but Singapore is an independent economic powerhouse, at least on paper, and Somalia, you know. Second important factor is the FCCB currency and FCCB currency. It could be of two types if you look from funding angle. Funding carry or investment carry. I have hardly seen any Indian company who issued in Japanese yen. And third important reason, and very important reason, is the embedded derivatives. These three things determine the valuation of FCCB. Until otherwise these things are carefully noted, the valuation of foreign currency convertible bond is really not possible, and if it is happening, then it is subject to mistakes. Let me tell you. Now comes FCEB, foreign currency exchangeable bonds. Now foreign currency exchangeable bond is a little different but more or less same. It means that, example, Reliance Industries Limited is raising the money, the principal entity, but the shares, the convertible is given of Geo, assuming Geo is a listed company. FCEB, foreign currency exchangeable bond, is of two types. Number one, when the shares, basically the organization shares, is a private listed concern. Example, Geo. Number two, when it is a listed concern. Example, assuming Geo is a listed company. Is of two types. But foreign currency exchangeable bonds is little difficult to evaluate than FCCB. And most important thing that is common to both, and that is why I have taken this at the last, is the swap ratio. Example, 4:1. 4 equity, 1 bond. 5:1, 5 equity, 1 bond. But one important thing that is changing in 2020, and I think we need to credit US banks for that, to be honest, is the reverse swap ratio. I know. In Indian context, most of the people in Indian context, hardly anyone even heard about that. What is reverse swap ratio? This is reverse swap ratio. And the banks and the financial institutions, those who are raising FCCB via reverse swap ratio, are, I think, the more successful. Example, in investment banking books, people are told split 4:1, 3:1, 7:1, 8:1, and whatnot. But really, people know reverse split. But does that mean that reverse split do not exist? It do. Our valuation desk believes that FCCB is one of the finest instrument to trade and finest instrument to raise money, provided the corporate treasury function of that organization is able to understand the complete scope of FCCB and FCEB. There are hell lot of orthodox example about FCCB and FCEB on Google, but you will hardly find any right example like the way I explained to you. And hopefully in one of our courses we would be launching a bit about how to value FCCB and FCEB. But I think as the world is moving towards negative interest rate parity, which is a reality, as the world is moving towards zero interest rate parity, which is again a reality, FCCB and FCEB is the norm of the day, provided that organization treasury function is able to understand what exactly this is all about. In case you're left with any small or something like that question, then you can definitely WhatsApp 9818485155. Have a great time, and in case you have any questions covering our TRFX Academy, hedge fund, paid research desk, video trainings and all, you can definitely WhatsApp 9818485155. Have a great time. Thank you.